Major crash come to the United States markets and world markets, not in the next few weeks, but likely in the next 6 to 12 months. And I'm not the only one calling for this. All of the big legends are now saying this is unsustainable. We've just had major news, which is Moody's downgraded the US government debt, right? Do you realize how big of a deal this is? This is the first time it's happening over 100 years. The last time this happened, when US government didn't have the highest credit rating, was 1919. That's 160 years ago. Fourth turning, everyone, fourth turning. First of all, a lot of people get triggered when I talk about the fourth turning, and what they don't realize is that I want to ask you, why are you in Bitcoin in the first place? You're in Bitcoin because you already know something's very wrong with government printing money. Something's very wrong with all these government debt that is unsustainable, right? So today episode, we're going to talk about what will protect you and your family and keep your family safe in the next big crash, the next big recession. In fact, I'm going to show you guys quickly what the experts are saying. Here is the founder of the world's largest hedge fund, Ray Dalio, and he said something worse than a recession is coming. Have a listen.
You're at a decision-making point and very close to a recession. And I'm worried about something worse than a recession if this isn't handled well.
Worse than a recession. Worse than a recession basically means depression coming. Okay, listen to what he says. It's bigger than that. He says there's going to be a new world order.
So we have that problem. And when we talk about the dollar and we talk about tariffs, we have that. We are having profound changes in our domestic order, how ruling is existing. And we're having profound changes in the world order. Such times are very much like the 1930s. I've studied history, and this repeats over and over again.
So when he says the 1930s, what obviously for folks who are a little bit older, you understand that the 1930s was the Great Depression. He keeps on saying it's worse than a recession. It's like the 1930s. That's a Great Depression. So what would you choose? We have the choices: Bitcoin, real estate, gold, stocks, bonds. Which did well in the 1930s, and why do they do well? First of all, you all know this is a Bitcoin crypto channel. I talk about it a lot, so I'm not against Bitcoin. But unlike the maxis, I'm not just going to sell you on the great things about Bitcoin, but I'm also going to tell you what I think could be a problematic with Bitcoin in a major crisis. So this is more than just a Bitcoin versus gold debate. I'm going to tell you guys the things that you don't hear anywhere else because I'm honest with you. But before we go on, first, let's answer the question of which crypto exchange does Pablo Jimenez use? Well, Pablo used this exchange that's non-KYC. That means you don't need to show your ID. That means even the exchange can't see you. So, of course, Americans can use it. The IRS can't see you. The tax office can't see you. FBI, CIA, nobody can see you, right? This is my link with Bitunix. Deposit, just by depositing, receive up to $200 US. Trading and win up to $35,000 US just by trading. Right, chance to win a Tesla Model 3, Rolex watch, Vision Pro from Apple, Sony, and limited time only ends on June 4th. This offer ends on June 4th. Okay, so now if you're watching this on YouTube, then the link is in the description below. But if you're watching it on any other platform, such as this one, then basically just click on my profile page, and should be, there is the stand link on my profile page, and it should be the first deal that comes up, Bitunix, because this is a great deal. Okay, let's get back to the markets, but keep in mind, folks, only right on the Pablo Jimenez link, only on the Pablo Jimenez link. So the thing about Bitcoin is that it actually moves similar to the or highly correlated to the Nasdaq, right? If we look at Bitcoin's moves, this breaking a new all-time high and basically going down 30% when it went to 74K. That was a 30% drop. People might say, oh, well, look, Bitcoin has showed a lot of relative strength. But if we just look at, any of these Magnificent Seven stocks, and if we look at QQQ, the Nasdaq ETF, for example, it's doing, does that look similar to you? Basically, big drop, bottoms on April the 7th, and it has a big bounce back to almost new all-time highs again, right? This has just been I mean, here are the Magnificent Seven stocks. If you were to compare that to Bitcoin, they basically do the same thing. Here's the Magnificent Seven stocks. So such as Google, Amazon, Apple, right? Facebook, no longer Netflix, Nvidia, Tesla, they all do the same thing. Like Nvidia, for example, was so popular, largest stock in the world. Basically, if you look at it, so on a weekly chart, yeah, massive drop, bottoms on April 7th, big bounce back to near all-time highs again. So my biggest warning for Bitcoin during the next major crisis, which these people are calling the something worse than a recession. They don't want to say depression or Great Depression to spook people out. But if something like that happens, and if the last time that happened, NASDAQ, the US stock market index went down 90%. If the stock market goes down 90%, would Bitcoin, what percentage would Bitcoin go down? You could say Bitcoin might decouple from the stock market and people realize, the government's printing money, whatever, and then Bitcoin would go up. That could happen, but there's no guarantee that Bitcoin would decouple from the stock market when that day comes. So first of all, what happened in the Great Depression and why I think it will be different this time. Let's just have a look at the Great Depression first, and then I'm going to talk about what the next crisis is going to be. By the way, guys, this is not just Ray Dalio. Guys like Warren Buffett, he's the biggest stock investor in the world. He's the most legendary stock investor in the world, right? He's saying the same thing. His big worry over the US dollar going to hell, right? US dollar could go to hell. This is a guy who always says very positive stuff. He's a patriot, says his famous saying is, nobody ever became wealthy shorting America, never bet against America. He says that stuff all the time. So now, have a look at this. Now, basically, even he's saying the US dollar could go to hell. He wants to invest in Japan for the next 50 years. These are all his quotes, and they're pretty famous. He said that only like a week ago during the Berkshire Great General Meeting. So, first time in over 106 years, right, Moody's downgrades the US government debt. And look, Moody's is one of the top 3 agencies, right? You have Standard & Poor's, Standard & Poor's 500, SP 500. That's where it comes from, right? Same agency. Fitch also downgraded. And this downgrade was 2 grades down, not just 1 grade down. Went from AAA to AA minus, then to AA plus. That happened in 2011, 14 years ago. So Moody's is last to do this, and they've done this like 14 years behind, 14 years late. I'll tell you another famous example where they're 14 years late. Like this is Enron. Enron, obviously the great scam stock that the great crash of Enron went from $90 to 0, and they made the downgrade when Enron was already down like 97%. So we can see Moody's is actually really, really late. When the crisis is already about to blow up, then they do this, right? And then they downgrade. So Moody's is, if anything, it's a late indicator. It's not an early indicator, it's a late indicator. So what happened during the Great Depression? So the Great Depression, to keep in mind, was a deflationary crisis because the banks would not expand the money supply. That is not going to, I don't think that's going to be the next great crisis we have. I think the next one is going to be an inflationary or hyperinflationary. But just quickly, these are the things that performed well during the Great Depression, right? Gold went up 70%, and that was government control prices. It went from $20. Franklin D. Roosevelt, US president, revalued gold to $35. Gold mining stocks went up 6x. I think it was called Stackhouse. Stackhouse mining went up 6x. Whilst the rest of the stock market, in general, on average, went down 90%, right? So imagine in a deflationary situation, some guy's $1 million portfolio goes down to $100,000, but some guy with $100,000 in gold goes up to, in gold mining stocks, went up 6x. Real estate crashed because there was money supply. was cut off. There was a lot of credit. Think about most people who buy houses. They buy houses using 80%, 70% borrowed money, loan from the banks. That's called credit. When they cut off that credit, people with only 20% deposit saved up, right? They cannot buy a house. They need to borrow the other 80%. Something like 9,000 banks went down. So real estate didn't work either. Stock market crashed, but what did work was bonds. Bonds and bond yields actually worked because it was deflation, meaning price of things went down. Inflation's when price of things go up. Deflation's when price of things go down. So what happened was like price of bread, for example, if it was $1, 3, 4, 5 years later, it went to 75 cents. Carton of eggs, say if it was $5, it went down to like $3.50, $4, something like that after 3 years. So in that situation, when bonds pay you like a steady $3 per $100 face value of the bond, 3%, $3, then that $3 can buy you more bread and more milk and more eggs. So that's why bonds actually work. But that's provided the US government didn't collapse. The US government didn't go bankrupt. Right now, the situation is we're worried that US government might not be able to pay back its debt. Yes, people say, well, they can just print money to pay back their debt, yada, 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 yada. Yeah, so what? That's not even a real answer. Every government in the world can just print money to pay back their sovereign debt, right? Everyone can do it. Printing money is not the answer because when they print money, basically, then, yeah, good luck. Bread will go to, I don't know, like $20 per loaf of bread. Eggs will go to $100 per dozen. Milk probably go to $30 per, I don't know, per quart, per container, whatever you guys, non-metric system you guys use over there. And I think that's the problem. That's the crisis we are going to have coming up. It's not going to be the Great Depression. It's going to be like the Great Depression, but with inflation, because the only way out of the crisis is like what you guys are suggesting, that the US government is going to print. Not just the US government, every government is going to print. China, EU, Australia, Canada, every government is going to print. So when that happens, basically, then we are going to have the opposite of the Great Depression. It's still going to be really bad. It's going to be like the Great Depression. People's savings going to be wiped out because imagine if you have like $100,000 in the bank and now that $100,000, before that could buy you a really nice car, now that could just buy you a loaf of bread. That happened in Germany in 1930s. 1920s. It was called the Weimar government hyperinflation. So when that happens, through these great periods of great inflation, what did well and what didn't do well? First of all, bonds got hammered, because if you are only paying off like 3% dividends each time and inflation goes up, then it crashes, bonds crash. Real estate actually did well. First, two modern day examples. 1970s United States, the median house price for a property in the US went from $20,000 to $63,000. So it went up 3x, did well. And imagine if people borrowed money, like, so they only paid, like, say, for example, 20% down. So that's $4,000 on a $20,000 property. It went to $63,000. Great, they did well. But the big warning here for property is that you can't use leverage. If you borrow money, interest rates, mortgage rates in the United States in like 1980, 81 went to something like 18 to 21%. It went that high in Australia as well. I'm pretty sure probably went to very high in the UK, Europe as well. So in that situation, imagine paying 20% mortgage rate. That even if your property is going up, you're still going to be forced to sell that property. You can't pay 20% mortgage rates. So that's the caveat on property, even though it works well if it's fully paid off. Gold obviously did really well. Gold went from like $42 to $800 something. So it was a 20x run during that inflationary period. Another example of property doing well is in Turkey. Right now, the Turkey lira is collapsing, but in Turkey, the only thing that's working well, that's beating inflation, is property prices. But inflation's high, interest rates are high, mortgage repayments are high in Turkey. So basically, if you own your property, it's an inflation hedge. And then also people say Bitcoin could work. I do think Bitcoin could work, but it depends on if Bitcoin decouples from the stock market or not. What happened in the 1970s, if we look at the S&P 500, is during periods of inflation in the United States, is that stock markets went like this. It's swung sideways, right? So in that kind of situation, what if let's go S&P 500, what if the Bitcoin decides to follow the stock market, which it does quite often, if it doesn't fully decouple from the stock market. Probably we need to look at the Dow Jones for that one. None of these indexes go back far enough to the 1970s. So, but I've shown that chart to folks many times. We're going to have to search for a historical chart. But basically, in the 1970s, the stock market didn't go much higher. It basically just kept on swinging sideways. And imagine if Bitcoin just kept on swinging up 3x, down 70%, up 3x, down 3% during a 5 to 10 year period. That's how it would perform if it doesn't decouple from the NASDAQ. There are actually other disadvantages of Bitcoin versus gold as well. And people in my Discord know that I come up with some points that nobody talks about, such as China actually controls the Bitcoin hash rate, and we control 51% of the Bitcoin hash rate. Then you actually control Bitcoin. So things like this, and China used to control 80% of Bitcoin hash rate. It's got the cheapest electricity in the world, and because they're pushing to EVs and solar power, they're about to control. They're about to have the cheapest electricity in the world. Things like this actually does impact Bitcoin and gold. So I could do a more expanded, comprehensive answer on Bitcoin versus gold. If folks want to see that, hit that like button. Tell me that's what you want in the comment section, and let me know in Discord. If not, then that's my explanation of what to do in the next big crisis on Bitcoin versus gold. Thank you for tuning in, guys. Catch you next episode.